As a tax-exempt nonprofit organization, the PGA Tour has saved millions of dollars in taxes, which is a good thing, right? Yeah, it looks good if you hate taxes, but this status has also been a long-time source of legislative trouble for the tour. And when you think of how much money the tour is leaving on the table by fronting as a kinda charity, it's bad for everyone involved. So the question is, will the PGA Tour's leadership ditch the non-profit facade for the more profitable alternative of being a for-profit organization? Since 1968, when the PGA Tour broke away from the PGA of America, the tour has been registered with the U.S. Internal Revenue Service, or IRS, as a tax-exempt nonprofit organization. This is because it has always claimed to be a 501c6 company. Okay, so what does that mean? The U.S. Tax Code Section 501c6 applies to business leagues, chambers of commerce, real estate boards, boards of trade, or professional football leagues that are not organized for profit and do not benefit any private shareholder or individual with any part of their net earnings. So in all of that taxman lingo, the PGA Tour identifies as a business league, which the IRS defines as an association of persons having some common business interest, the purpose of which is to promote such common interest and not to engage in a regular business of a kind ordinarily carried on for profit. That's just more tax jargon to say the tour's priority shouldn't be on its profit margin. But anyone who's been to a PGA Tour event knows the PGA Tour lives to make money. And that's exactly why some members of the U.S. Congress have been at war with huge sports leagues like the PGA Tour forever. They believe these guys are cheating the system. And they had their first victory in 2007 when they forced Major League Baseball to drop its 501c6 status. Then the National Football League fought hard until it also caved under congressional pressure in 2015. So that leaves the National Hockey League, the PGA Tour, and the LPGA as the only premier sports leagues benefiting from this tax-exempt status. But apart from the fact that the PGA Tour is a non-tax-paying mint, the way the organization handles its earnings has also raised a lot of eyebrows. The tour's 2021 tax filings showed that it raked in $1.6 billion in revenues, and at the end of that year, it had $4.5 billion in assets and $3.3 billion in liabilities. And that year, the tour's commissioner, Jay Monahan, took home $8.6 million as payment for his job. So you can see how this is fraught with suspicion. The tour can't be making so much money and paying so much to an individual while claiming to be in the same class as the American Medical Association. In 2013, an ESPN investigation looked into the tour's charitable activities and called it out for not doing enough actual charity. For example, they found the tour had spent 16% of its revenue on charity when the industry standard was 65%. Also, some of the charities affiliated with it were losing millions of dollars on hosting PGA Tour tournaments. Instead of raising funds for the charities, most of the money was going to paying players and promoting the tournaments. But to these accusations, the PGA Tour simply reminded ESPN that it was a non-profit and not a charity organization. That sounds like some Latin, so let's see what the tour was trying to say. The PGA Tour is a 501c6 organization, which is classified as a non-profit, so it gets to enjoy tax breaks and low-interest loans. However, its greatest perk might be in its freedom to lobby the U.S. Congress as much as it wants. In 2012, for instance, the tour spent around $500,000 on lobbying. And that might explain why it's still hugging its non-profit status to this day. But the more traditional charities, like the ones the PGA Tour works with, are classified as 501c3 organizations. These are the organizations that receive tax-deductible donations, which is something 501c6 establishments can't accept. Now, although the tour's donations are way below industry standards, they are still sizable amounts. In fact, no other sports league comes close to the PGA Tour's charity numbers. In 2021 alone, the tour gave away $173 million to charities, and that was 12% of its revenue. But it also made it only $8 million short of being the top donor organization in the U.S. Add to that the over $5 billion the tour raised for charity before 2021, and you find it hard to dispute its lofty philanthropic claims. Also, even when affiliated charities don't make a lot of money from tournaments, they get a lot of visibility and attract potential donors from their PGA Tour activities, and those are huge gains for them. However, the Tour is still a multi-billion-dollar institution that doesn't pay taxes, and new developments around it have put its tax-exempt status under an even bigger microscope. LIV Golf needs no introduction to the golf world today, especially after its introduction in 2021 threw golf into so much chaos. Thanks to the backing of the Saudi Public Investment Fund, aka PIF, that made it an unstoppable force. At first, as most people react to an interloper, the PGA Tour and the European Tour fought this monster with all they had. But they soon realized LIV was a monster that couldn't be stopped. So as many of the PGA and European Tour stars continued sacrificing their memberships on the altar of multi-million-dollar deals, Monahan and his associates had to take a mulligan. They gave that Saudi money another look and decided it wasn't as bloody as they thought it was. Then they announced a merger between the PGA Tour, the European Tour, and LIV Golf in June 2023. As the CEO of this new body, Monahan himself was looking at a huge payday once the deal was finalized. But back in Congress, the legislative binoculars were back on the PGA Tour. Immediately after the merger's announcement, the chairman of the U.S. Senate Finance Committee, Senator Ron Wyden, opened an investigation into this Saudi business. Then he announced two bills that would end the PGA Tour's non-profit status and the possibility of Saudi Arabia profiting from it. These were the Sports League Tax-Exempt Status Limitation Act and the Ending Tax Breaks for Massive Sovereign Wealth Funds Act. You'll notice the direct targets of the second bill are not just sovereign wealth funds, but the massive ones. And the Saudi Public Investment Fund definitely fits that description. The PIF is a $925 billion savings account and the war chest of the second biggest oil-producing nation in the world. But investments with these desert dollars have been controversial due to Saudi Arabia's highly publicized human rights violations. Before the PIF's investment in golf, the media had criticized the Saudi government for starting a sports washing campaign. Then it was splurging on soccer, boxing, Formula One, and horse racing. And most of these sporting events were held on foreign soil and in Saudi Arabia. However, the U.S. Congress took it personally when they saw that Saudi Arabia was trying to wash some of its dirty billions in golf. Wyden and his colleagues were especially irritated by Monahan's U-turn after his initial pushback against LIV. But that pushback had been worth $20.7 million in legal fees in just 2022. For comparison, that was $500,000 more than the Tour's legal fees for the previous 14 years. Remember, the Tour was up against one of the deepest pockets in the world. So Monahan and his team had to pull the plug on that expensive legal battle. But according to Wyden, the deal might also pose a threat to U.S. security, as some of the Tour's properties are close to U.S. military bases. But honestly, it looked like the senator and his mates just hated the idea of giving tax breaks to a Saudi investment. The PGA Tour has already spent decades holding on to its tax-exempt status, and it doesn't look like it's letting go of it anytime soon. While the Saudi deal remains in the works, the Tour has already created a structure that will allow it to play freely in the open market and keep its non-profit status. In January 2024, Jay Monahan announced PGA Tour Enterprises. According to him, this new wing of the PGA Tour had received a private equity investment of $1.5 billion, which was expected to increase to $3 billion over a short period. Now, with that kind of money, Monahan knew he had to separate the new toy from the old boy. So unlike the PGA Tour Enterprises would be a for-profit entity. And this will allow both external investors and golfers to have equity in the new business. This was how Monahan explained the relationship between the two at the 2024 Players' Championship. The best way to look at that is all of our membership, eligibility, and most importantly, all of our competition-related business. It sits right there. There is the PGA Tour. Then he continued by saying, PGA Tour Enterprises takes all the commercial assets that have existed in the PGA Tour and puts them in a new for-profit entity. the relationship between the two is exceedingly close. So the PGA Tour has been reduced to an administrative arm, and this new thing would be the commercial aspect. Got it. This looks like a sneaky surrender to Congress, but it's also the perfect setup to let the PIF in without groans from the Capitol boys and gals. Also, it'll prevent the PGA Tour from filing the IRS's Form 990, which details and publicizes its annual earnings. And this is perfect for Saudi, which doesn't like having its business in the open. So PGA Tour enterprises will take all the stain that the Saudi money brings, but the PGA Tour itself will remain the saintly Mother Teresa of sports leagues. Whether this is a masterful chess move remains to be seen, because however Monahan paints and dices it, we are still talking about one body, which is the PGA Tour. So even if this new development gets the wolves off the PGA Tour's back for a while, its days as a tax-exempt nonprofit still look numbered. If you enjoyed this video about the PGA Tour's nonprofit status, check out the video on the screen now, or the one we posted below because we're sure you'll like that one too. Let us know in the comments if there's another golf story you'd like us to cover. See you there!